Back in December, I was trading in and out of Cardano, trying to make the most of the short-term swings. Now, I started with around $10,000, and through a handful of well-timed entries and exits, I managed to grow that into a $13,000 position. Now, at the time, it felt like momentum was finally shifting. Bitcoin was moving, altcoins were showing signs of life, and it genuinely seemed like the bull run had finally arrived. Now, everything on the chart pointed to continuation. Sentiment was starting to shift, and like a lot of people, I thought I just had a bit more room to squeeze some more extra profit out of Cardano before committing to a longer term hold. Now, the thing is, even though it looked like the market was heating up, as I'd said in previous videos, and I'll say it again now, the post-halving bull run isn't always guaranteed. No matter what's happened in the past and what other people say, every cycle's different. History rhymes, but it doesn't always repeat perfectly, and just because we've seen explosive rallies after previous halvings, it doesn't mean it's a rule that we can count on forever, and that looks like that's true right now. But anyway, in that moment back in December, it felt like the pieces were falling into place, and I wasn't quite ready to let go of the trade and just hold. I thought I had more movement left and more movement in the market. ADA was trading at around $1.20 at the time, and that's when things started to turn, and what had been flexible trading positions suddenly became something else, and I didn't make the decision to hold, the market made it for me. That dip came faster than expected, and before I could react, that $13,000 position was no longer in motion, it was just stuck, and I was holding it not because I chose to, but because I missed the exit. Now, almost immediately, the market started to slide, and at first it was just small moves downwards, the kind of movement that you ignore when you're committed to a longer game. But those small drops added up, and week after week, the chart just kept bleeding. And what began as a slow drift downwards turned into a consistent grinding decline. The kind that makes you question your timing. The kind that makes you wonder if this is just normal market volatility or is something worse. And before long, I was sitting at a 50% downturn. Now, my $13,000 position had become roughly $6,500 on paper. And while I wasn't panicking, I was definitely asking myself the same question a lot of others were asking: did I get it wrong? Now here we are, June 2025, ADA is trading around 66 cents. And for anyone who bought around the same time that I did, that number probably stings quite a bit. But that's the reality of crypto. It doesn't always reward conviction immediately. In fact, sometimes it feels like the more you believe in something, the more the market punishes you for it, at least in the short term. But today, I want to take a step back and really look at this position, not just emotionally, but rationally. I am the rational ape after all, and I want to ask the honest question: will Cardano ever reach $1.20 again? And if it does, how long might that actually take? So let's start with where Cardano stands today. Despite the frustrating price action, Cardano has remained one of the most consistently developed projects in the entire space. It's still comfortably inside the top 10, or probably at top 10 at the moment in cryptocurrency market cap. The chain is live and secure, the staking system continues to work without issue, and the development team led by Charles Hoskinson has stayed committed to their methodical, peer-reviewed academic approach. Projects like Midnight and Hydra are progressing, Mithril is rolling out, and from a technical standpoint, the chain continues to evolve in a steady and thoughtful way. That said, it's also fair to say that this slow, deliberate pace can be frustrating, especially for investors who are used to the rapid iteration and constant noise of chains like Solana or even the meme coin ecosystem. Now, here's the truth. In crypto, attention is currency, and right now, Cardano doesn't have a lot of attention. If you look at on-chain metrics like daily active users, transaction volume, or TVL in DeFi, it's clear that other chains are getting most of the action. Solana has exploded with new narratives. Ethereum remains dominant. Even some layer 2s are pulling attention away. Meanwhile, Cardano feels quiet, not dead, just under the radar. And for long-term holders like me, that silence is both a frustration and potentially an opportunity. You see, ADA has done this before. In the previous bull run cycle, it spent months, even years, consolidating in the background before exploding upwards when momentum finally caught up with the fundamentals, and it went well over $3 at its peak. And that wasn't just hype, that was the market finally noticing the groundwork that had been laid. So when people ask me if ADA can get back to $1.20, I say absolutely. From a historical perspective, it's already done far more than that before. But the real question isn't whether it's possible, it's when and what has to happen between now and then to make that happen. Now, we've got to remember how crypto cycles work. First, Bitcoin leads, then Ethereum follows, then the money flows into large cap altcoins like ADA. After that, the more speculative plays, the small caps and the meme coins get their turn. And if we're heading into a new cycle now and Bitcoin continues to push into new all-time highs, then ADA will most likely or certainly benefit from the rotation. A 2x from here isn't just possible, it's expected in a true bull run market. But if Cardano wants to do more than just ride the wave, if it wants to reclaim $2 or $3, it will need something more than favourable macro conditions. It will need a narrative, a reason for attention to return. Real user growth, adoption, compelling dApps and community excitement, and it needs traction, not just tech. So now the personal part, why am I still holding Cardano? Why sit on a 50% drawdown when I could be cutting my losses and reallocate that to something that's moving faster? The answer's simple. I still believe in the long-term thesis. I didn't get into ADA thinking it was going to pump next week. I bought it because I believe Cardano is trying to solve real problems in a disciplined way. It's not just another hype project. It's not chasing the flavor of the month. It's building something meant to last. And while that doesn't always show up in the price chart, it's something that I respect and want exposure to. Look, no one enjoys seeing red in their portfolio, and I'm not immune to doubt, but I've been in crypto long enough to know that timing is hard and patience is incredibly rare. We want instant returns, but the truth is most real moves in this space happen after long periods of boredom, frustration and silence, and that's where we are right now with Cardano. Quiet, unloved, underestimated, but not broken, not abandoned, and definitely not finished. Because in crypto, time works differently. What feels like years of pain can reverse in a matter of days. All it takes is a shift in attention, a wave of capital, or one killer application to flip sentiment. And when that happens, if it happens, you don't want to be chasing green candles. You want to already be positioned. So I'm staying patient, I'm staying focused, and I'm staying right where I am. Now, ADA might be slow to move, but when it does move, it tends to surprise people. And if that day comes again, whether it's later this year, sometime next cycle, or even further down the road, I want to already be in a position, not chasing after the fact. Same wallet, same conviction, same willingness to wait. Because this isn't just about one coin, it's about having a strategy that you can live with. It's about knowing why you're in a trade or in a long-term position and being okay with the time it might take to play out. It's easy to feel like you're getting left behind when everything else is pumping and your portfolio is still sitting still. But that's where discipline matters most. I'm not here to pretend I made the perfect call. I didn't. But I made a decision based on what I believed at the time. And I still believe the fundamentals of Cardano are solid and strong. And that belief doesn't mean that I'm blind to risk or that I think it's guaranteed to recover. It just means I'm willing to wait and see it through rather than jump ship at a loss just to feel temporarily better. So no, I'm not bailing on Cardano. I'm not panicking and I'm not giving up completely. I'm giving it time because that's the part of investing that nobody likes to talk about. Not every play pays off in days or weeks. Some of them take much longer, but sometimes sticking with something that you believe in, even when it's out of favor, is what makes all the difference. And if Cardano does rise again, not out of hype, but out of actual growth and adoption, I'll be here for it, calm, collected, and still holding my bag, because that's what conviction really looks like.